Tether's USDT, the largest stablecoin by market capitalization, recently witnessed a depegging moment that rattled investor confidence. Since then, the firm has stressed its continued commitment to transparency. Was this an attack on Tether? Will USDT maintain its dominance? And what do Tether's reserves look like? Coming up on Word on the Block, Paulo Ardoino, Chief Technology Officer of Bitfinex and Tether, dives deep into those topics and a whole lot more. Cryptocurrencies have been facing fear, uncertainty, and doubt, and included in that is also digital currencies. Its most recent target, Tether. On June 15th, the world's largest stablecoin, USDT, briefly lost its dollar peg. Although the USDT has stabilized since, the incident once again raised concerns about the general stability of stablecoins in an uncertain market. Now, stablecoins are backed by fiat or highly liquid assets, or in some cases, smart contract algorithms. But are all stablecoins created equal? And why is transparency of paramount importance in the crypto industry? We're going to dive into all of this in this edition of Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast. I'm Forkast Editor-in-Chief Angie Lau. Well, there is lots happening, and who better to break it down for us than Paulo Ardoino, the Chief Technology Officer, or CTO, of not one, but two companies. We have Bitfinex, one of the world's first crypto exchanges, and Tether, the name behind the world's first and largest stablecoin, USDT. An Italian developer and entrepreneur with a passion for coding and a keen eye for finance, Paulo has been shaping the tech and crypto landscape for years, and we've been watching every step of the way from our days back in Hong Kong. Paulo, welcome to the show. It's really good to see you again.
Thank you very much, Angie, for having me yet again, and it's always a pleasure.
It's our pleasure indeed. You know, I look back at the past few years of the industry and the peaks and the troughs, to be sure, and one could definitively say that we are far from the peak in terms of market sentiment and the market pricing. But talk about how Bitfinex and Tether has been able to really surf that over the past couple of years. Back in 2012, I remember there were 5 exchanges. Bitfinex was one of them. Now there are over 500 crypto exchanges, and you joined Bitfinex back in 2014. You transitioned to become the CTO of both Tether and Bitfinex. Where are we now, in your view, in the cycle of adoption?
Well, we are definitely in a much different space than 2012 and 14. The industry grew rapidly. I think the last few years has been quite bumpy, as you mentioned. As of today, as of the last 10 days, what is happening is quite interesting. There are a few of the largest wealth managers in the world that are considering and are filing applications to launch Bitcoin ETFs. So that means that something, I think, important has changed. The trust of big institutional players have gone up in the last few months and few years, despite what happened last year in 2022 with Terra Luna, with BlockFi, with Celsius, with FTX in the end. This year started with issues on the banking side. We have seen Silicon Valley Bank failing. We have seen Silvergate and Signature following the same path of Silicon Valley Bank. So that showed that also on the traditional financial industry, there were issues as well. So the sum is kind of the sum is telling us that on both sides there are still issues. I think there is a lot way to still prove from founders and the industries. I think the industries are trying to get to work together a little bit more. Again, we are seeing hedge funds trying to put their feet into the water of cryptocurrencies, and cryptocurrency trading firms, including Bitfinex and Bitfinex Securities, are looking at providing more traditional financial services. So it means like we are seeing the two industries almost coming together in a single bigger industry that is in the end the things that make more sense in the end. I don't think crypto is here to completely destroy the banks. I don't think we ever wanted that, but we want to bring some change.
I want to pick up on that point. Absolutely, we are starting to see, and we've always, at least from our perspective, we've always seen the financial TradFi industry merging into this innovation that we're seeing in the digital finance space, because as USDT, really grows, it's going to have to really not only serve the retail and the consumer market, it's going to grow up, and it's obviously serving a lot of mid-sized and large cap firms right now internationally. But at some point, when you get to the institutional level, what level of trust do you think that you're able to really communicate to institutionals? Do you think that you're there yet? And the regulators are all circling. So do you think that you've got a ways to go, or how are you addressing those transparency needs?
Sure. So I think Tether from 2021 made huge steps in improving transparency, not just for itself, for the entire industry, right? So we were the first stablecoin to provide the breakdown of reserves. I don't want to hide behind a finger. The first release showed that we had commercial papers that were criticized publicly, although they were, as was demonstrated recently with the reveal after the FOIL Act information that was sent to different journalists. It was revealed that, in fact, the commercial papers that we had in 2021 were extremely safe. They were rated for the vast majority A1 and A2 from Standard & Poor's. But nevertheless, Tether publicly took the stance of reducing these commercial papers to zero. That happened basically by the first quarter of 2022. Tether didn't have so it reduced by 90% the exposure to commercial papers, removing everything of that value to U.S. Treasury bills. By October 2022, Tether didn't have any single commercial paper, and everything, all those amounts were all converted in U.S. Treasury bills. So now we are in 2023, and we are in a situation where 85% of our reserves are cash and cash equivalent, of which the vast majority is U.S. Treasury bills. If we do an exercise that is called, so first of all, by direct ownership of U.S. Treasury bills, we have around $56 billion that are, I think, more than Australia and Mexico, right? Then if you sum the overnight reverse repos that are around $9 billion, we go up and we are around $65 billion. And if you add the money market funds that are also invested in U.S. Treasury bills, we are adding a few billions dollars more. So the vast majority of our portfolio is in U.S. Treasury bills. And we have an allocation of gold that is also public, is around 4%. And we have a few other allocations. On the transparency side, I think, as I said, I'm speaking about all of this publicly, and is part of the attestation, a quarterly attestation that is being provided and performed by BDO, that is the top 5 auditing firm in the world. So definitely things can always get better, right? So with Tether, we strive to always provide more information, to respond to all the questions. We always start to provide also information on how we think we want to manage our excess of reserves, right? When I'm asked from regulators or from institutions how I can prove that Tether is in fact safe, and looking at our kind of competitors. You have the banks that, they have to keep 8.5% in collateral in the bank. So on one side, you have a company that is over collateralizing its portfolio, and on the other side, you have banks that are doing fractional reserve. But on top of that, 2022, you at the beginning of our conversation, you talked about the last years, right? In 2022, Tether was subject to an attack from short sellers. They wanted to prove to the world that, in their opinion, Tether didn't have all the money that it was saying to have. These short sellers trying to put redemption pressure on Tether, and that's fine, right? We always like to have a trial by fire, because that is the best statement of our solidity. So in 48 hours, Tether was able to redeem $7 billion. So that was 10% of our reserves. And in 20 days, we processed around $20 billion in redemptions. That was 25% of our reserves. And we could have gone farther. If you look at what happened with SVB, or what happened in 2008 with Washington Mutual, they were not able to survive to a 10% redemption pressure. And so it means that with Tether, we are doing something right. We are doing something that is going against the classic portfolio management of even the banking industry that is extremely regulated, and yet it fails to provide reassurance to, in certain situations, also recently, it fails to provide certainty and reassurance to its own customers.
All right, Paolo, hold on to that thought, because when we come back after the short break, I want to dig a little deeper into what exactly is in the underlying securities, the basket, that is the foundation behind the one-to-one peg to the US dollar. Word on the Block continues. We'll be right back.
In today's volatile macro environment, investors are demanding greater disclosure and liquidity when it comes to stablecoins. Tether claims all their tokens are pegged in a 1-to-1 ratio to fiat and backed 100% by reserves. We dig deeper into what's backing USDT, and is it enough?
If you don't understand the future, you'll never see your place in it. Introducing Forkast Plus, covering all things blockchain, independent reporting, insights, and access from Asia to the world. We cut through the noise where technology, insights, and access meet, where smart conversations happen. Make friends with disruption. Forkast Plus.
All right, welcome back. We are here with Paolo Ardoino, CTO of Tether and Bitfinex, and you called the depeg a good stress test for the company, but still, that was a scary time during a time where the industry really shouldn't or wouldn't want to invite that type of concern, especially as there's just so much uncertainty overall from the marketplace on crypto and digital assets. How did it depeg? And I note that it's recovered since then, but what was that instance where it did depeg, and how do you internally look at creating a position where stability is maintained and preventing that from happening again?
So this is a really good point, and something that I like to elaborate, because I think there is a little bit of misconception when it comes to these depegging events, right? The price of USDT went 30 basis points, so 0.3% below the dollar on few exchanges, on few cryptocurrency exchanges. Our main competitor had a similar issue 3 months ago, and their price went 13%, right? 13% below the dollar on the very same exchanges. So I said that was a good stress test for Tether for this reason. Tether is in charge of the primary markets. The primary markets are basically Tether.to platform. That is a platform where we process issuances and redemptions. The role of the stablecoin is to always ensure that all the customers have a redemption that is always one-to-one to the dollar, right? So a customer comes to the primary market, they want to redeem the dollars, and they always get the dollar back. So that is what we have to do as a stablecoin. That is the stability, right? So if we always maintain and we always honor every single redemption at $1, then the market is stable. So as a stablecoin, we cannot control the secondary markets. The secondary markets are all the cryptocurrency exchanges that are using USDT as their main liquidity source and as their dollar. But on these exchanges, you can find short sellers, you can find people that are speculating, you can find every type of person, and they can, the crypto industry is still young, is still small. So when there is FUD, when there is uncertainty in the market, you always find people that are trying to leverage these events to create panic. The crypto industry is like a small town, right? It's a small Italian town where you spread few words and everyone panic, right? And so it's really true. It's like that. Crypto Twitter has a lot of memes for that. And so you get a lot of sell pressure, and you get few traders that are mounting that pressure. But it's actually, there are few smart traders that are making money because they are buying cheap USDT from the market. 30 basis points is a lot of profit for market makers, and they're coming to the primary market and redeem them for the dollar. And they're doing this back and forth so they can make the revenue for the day. So what I want to say with this is that we cannot control the secondary markets. That wouldn't be also fair and legal to control them.
At the end of the day, that trust discrepancy was leveraged by the secondary market participants, but at the primary level where people wanted those redemptions, you were able to redeem. Sometimes the discrepancy in the markets, especially in the Bitcoin market, you've said that you hold a percentage of the underlying collateral in Bitcoin and other assets. We live in a very volatile macro environment right now where different asset classes, different pools of securities are going up and down beyond that margin of error of 3%. 3% is a normal margin of error in crypto. It could be definitely 10x that. How are you keeping abreast of just where to accelerate into which currencies, and just to make sure that peg is one-to-one? And then on top of that, you have the inflationary pressures around the world from a fiat perspective. So all of this comes into play. You're kind of trying to juggle 20 plates in the air, prevent none of them from falling, and they all have to be at the same level, spinning at the same time. It's definitely a juggling act. But how are you doing that?
So that is another great point, right? So I want to clarify that. Yes, Tether has bought recently Bitcoins, has an exposure to Bitcoin, and we publicly provided information around that. We took a stance where we are actually accruing and diversifying the investments, what we would excess of reserves, because everything else is we are starting to approach a really, we keep buying with everything else that is the one that is the part that is backing the reserves. We keep accruing more and more UST bills. Because the job of Tether is, of course, is to be able to provide the reassurance that we don't have to beat the dollar, right? So we have to beat the dollar. We have to provide back the dollars to the users. A few years ago, Tether was super healthy. Yeah, it was already super healthy company, but we didn't make all the money that we are making today. We are making all the money we are making today because the yield on the U.S. Treasury bills has gone up incredibly. We are not taking out all those profits, right? All those profits that are given by these U.S. Treasury bill yields. For the vast majority are staying in the company because we understand that things can change, right? We don't want to run on a thin margin. We are keeping accruing additional stability for the company and for all our users.
the spread of trust into stablecoins is growing, and it really supports this future of tokenization. It offers unparalleled opportunities to shape our digital future. Paolo, I want you to stay right there, because when we come back, a lot of countries are advancing on the development of their own CBDCs, including China, Hong Kong, and the UAE. And so want to ask you about CBDCs. Is it a threat to stablecoins? Join us when we come back.
Stablecoins are digital assets tied to real-world money like the US dollar. Central bank-backed digital currencies, or CBDCs, on the other hand, are a digital form of the country's legal tender issued by a central bank. As more and more countries speed up their CBDC developments, could they become a threat to stablecoins? More when we come back.
Welcome back. We are here with Paolo Ardoino, CTO of Tether and Bitfinex. And Paolo, I had to grill you on, the holdings and the stability of USDT. And I have to, hats off to your CIO and your CFO. The team is doing, every team right now that's trying to create stability in the marketplace deserves a nod of respect. These are volatile times yet, but really it's building towards a future, right? Tokenization of assets beyond currency, beyond cryptocurrencies. And I want to talk about that a little bit. According to latest Bernstein research, tokenization opportunity could be worth over $5 trillion in the next 5 years. And that opportunity will be led by stablecoins and CBDCs. And with the perspective that about 2% of the global money supply can be tokenized via stablecoins and CBDCs. How are you viewing that opportunity?
Well, I think that is one of the reasons of existence of Tether in the first instance. We have, in 2014, we created this industry of tokenization of traditional assets, starting with the most used asset in the world, that is the dollar. But we always look at other opportunities. So first of all, it's I think tokenizing stocks and bonds is going to be the next big step. So that is the market that is so big. And even like the dollar, tokenizing the dollar is another thing that at Tether we are doing. We launched a product called Tether Gold that is already making the waves in among cryptocurrency exchanges, and we are seeing more and more interest and adoption around the world.
Yeah, no, I wanted to ask you about the CBDC. A lot of people saying, and obviously you see the landscape of countries turning their fiat into a digital version of it via central bank-backed digital currency. So then, why the need for stablecoins?
Well, that is a great question, and sometimes I have the opportunity to talk to central banks and central bankers, and the reality of things is that CBDCs have created some concerns from 2 points of views. The obvious one is the consumer. So you are like a consumer, you are a person, you want to open a bank account, you choose a bank. You pick a bank that you want. There in countries, there are many banks. You pick one. And when you get a credit card from or a debit card from this bank, or you do wires, the information of which coffee, where you bought the coffee, which books you bought, or like where you bought your books, and all these things remains for the majority between you and your bank. Now, in a scenario with a CBDC, that information will be seen directly by the central bank, right? That is a bit more centralized at the government level. So it means that every time you buy a coffee, every time you buy a book, and so on, the central bank could trace you, could know exactly what you did every single day in your life at the second level, right? So every single second of your life, the central bank will know everything. And so that is kind of scary. It's kind of Orwellian in many ways. And so that is the fear on the consumer part. But also, this is quite interesting, there are two fears at the central bank level. So the first fear is that if CBDCs are successful, that could completely kill the banking layer in a country, right? So the cryptocurrency industry always said that they were trying to revolutionize the bank and kill the bank. But imagine if instead it's the central banks that are killing the banks, because with the CBDC, the central bank could offer loans. With the CBDC, the central bank could make transaction fees. Exactly. And also, this is even trickier. CBDCs could also replace cash. But what if, so cash in this moment doesn't hold any interest. So now in Europe, until like 2 years ago, you had the negative interest on your bank deposits, but you don't have negative interest on cash.
Yeah, and it's tied directly to that country's monetary policy versus a stable coin in a private market would be tied to the market, the global market, simply supply and demand. No. Wanted to ask you about then that added opportunity, one that we're seeing emerge out of Hong Kong, and with the regulatory rails that really are establishing the marketplace, the momentum is really growing from that region. But also, where do you think the regulators, the institutions, as they are coming in, you had mentioned at the beginning of our conversation, the BlackRocks, the Fidelities, the institutions that are coming in now with the regulators, and especially across the Asia Pacific and Europe, and now what we're seeing in potentially the United Kingdom, coming in and creating very specific regulatory rails. What kind of world are we going to find ourselves in 12 months from now, 18 months, 2 years?
I think we are going to see a world that is where there will be regulatory competition. So I cannot believe that there is the timing between US increasing pressure on cryptocurrency firms and UAE, Hong Kong, Singapore actually opening up to the industry. So you could argue that actually countries are understanding the potential in terms of wealth, employment, and opportunities and advancement in research that this industry could bring. And so regulators and probably governments are talking to regulators to see how they could invite these opportunities into their countries. And so I think it's extremely exciting, because then you could argue that companies, and since we are all in a way digital nomads, companies will start looking at multiple opportunities and will start moving and will start bring their expertise, bring their wealth, bring their employees in countries that are more open, with more open regulations. Because, of course, regulations are important. No one wants to be a pirate. But also you want regulations that are actually providing a good umbrella for the technology to grow, rather than trying to, shut down or limit the potential of this technology.
Thank you for giving us the opportunity to let our audience really own it and understand it a little bit more, and grow their perspective. And Paolo, I really want to thank you for joining us today. It was great to have you on again.
Thank you very much, Angie, and I cannot wait for our next time.
Next time, anytime. All right, that's a wrap, everyone. Thank you for joining us on this latest episode of Word on the Block. I'm Angie Lau, Forkast Editor-in-Chief. Until the next time.